America doesn't run on gold, it runs on. Hello, Market Club members everywhere. Adam Hewison here, co founder of Market Club, with your daily update for the major markets. Have you ever tried stuffing a gold bar into a fuel tank? I'm sure you haven't, and that's the point I want to make today. America runs on number two diesel fuel, not on gold bars. Without fuel, America's economy is dead in the water. Every year, the world needs more and more energy. Look at what's happening in China and India, as the working class are moving from bicycles to mopeds and in some cases even cars. All this mobility, all takes energy, and the energy for now is petroleum based. Look at the population numbers. India and China have a combined population of 2.9 billion people, representing 36% of the world's population. To put that in perspective, that's 9.2 times bigger than the United States. And here's the wild card, and it's a big one. The Middle East. What is going to happen in that most unstable part of the world? Any major disruption, in that area will cause oil prices to skyrocket. And if that's not bad enough, Hugo Chavez just got reelected to the presidency of Venezuela for 6 more years. Chavez, who is no friend of the United States, can use his oil as an economic weapon against us. And he will, just as soon as he can make a deal with other countries to sell them his country's oil. All told, it is not a rosy picture for energy prices to remain stable. I recommend that you keep a close eye on crude oil, which is moving up today, and the ETF USO. It could turn out to be your trade of the year. Okay, enough of that subject. Let's go and take a look at the markets and see what's going on. So let's go to our portfolio and take a look. We're going to cover a number of markets. We're going to look at Eli Lilly, which is making all-time high, one of the all-time highs, but the highest in 4 years for Eli Lilly. We're going to be looking at Apple. We're going to look at the ETF USO and also other markets. So let's get started right away. I have to say, this is disappointing for a lot of bulls who are bullish on the equity market. Now, the key here in my mind is very simple, is this line right here, and that comes into the 1430 level. If you just put this into line perspective, and I'll show you what I'm looking at. I'm going to scope this out just a little bit more so we get like a month's play, and just take the parabolic and also the Donchian trade channels off. So here's a very simple pattern that repeats itself all the time. We talked about this in our Traders Whiteboard series. If you haven't seen that, I think this is the second lesson we talk about, and that is you've got, this is what we call the Twin Peaks and the pivot point right here. If we go below this level right here, and this is 1430, then we're going to see a move that's going to take this market down quite a bit lower than where we are right now, somewhere in the region of about the 1390 to 1400 level. So 1400 would make sense just because that's the previous low that we had back here before we broke up to the upside, but that would be obviously more pressure and put this market on a more defensive measure. Right now we have a plus 55 reading, which is a sideways market, and it looks as though that is going to be maybe the case right here, but this is definitely a key level of what, 1430. We're currently trading around 1443. It's Wednesday. It's Tuesday. We could see a lot more pressure coming into this market later in the week. So let's clear this screen and go to our next market. Next market we're looking at is going to be the Dow, and I'm going to go back to our candlestick charts and get a little closer perspective. 3 months, you can see there again, big down day today, flashed a daily signal. Not such an important element for stocks or equities, but certainly that's the first weakness we're seeing coming into this market. And I think we'll see potentially this level here. This is definitely a key level, the 13,400 level. If we see a move below this level, I think it would be really a negative for the Dow. And again, same pattern, Twin Peaks, pivot point, move below the 1400 level, and I think the 13,400 level, it's going to be a little bit negative on this market. Now looking at the NASDAQ, a completely different picture. This market has already rolled over, and you can see how this market's rolled over just by visually. You can see it just rolling over to the downside, and largely it's in part because of what's happening to Apple, which is under a lot of pressure, which we we warned about last week. So we'll talk about that a little later on in today's broadcast. But nonetheless, this is a pretty negative picture for this market. Now, what we can say is, let me just clear the screen and go back and scope this out just a little bit further. We can say potentially you could see a Fibonacci retracement. Let's just scope this down to the very lows here, which is the big major low, down to around the 2900 level, which is still a long way away from where we are right now. So I think that's definitely something to be concerned about. So let's go to our next market. This is crude oil. Now, crude oil is having a stellar day. This is the big story we wanted to share with everybody today, and that's why we had this. You don't stuff gold bars in your fuel tank. It's crude oil, and it's oil. That's what drives America. So a big, big day today. Currently trading on the December contract. We've changed to the December contract. It looks as though you've made potentially that turn. And if you remember, we were looking for the Fibonacci here again. This is where this really comes in very, very, it's very important that you see that. Let me just go scope this out, take this off and go to Fibonacci. And we go from the highs down to the lows. You see me do this 1,000 times, but look at where we are. We're just right, very, very close to a 61.8% retracement, certainly a 50% retracement we had, and the market started back up. So again, the key thing there also is to watch this level here. If we see the MACD turn back up, it'll be a very positive sign for this market. Right now, we have our long-term indicator, our monthly indicator positive, our short-term daily indicator positive. The only one that's not there yet is the intermediate weekly, and that potentially could come if we see this market continue its strong move up tomorrow or certainly later in the week. So pay close attention to that. Again, the wild card is the Middle East. No one knows what's going to happen there. No one knows what Chavez is going to do. And obviously, he does not have our interests at heart, and neither do a lot of the folks in the Middle East. So let's just look at the reality of the situation. And this is, I think, it's a failed energy policy we've had in this country for the last several years. So let's scope this out, go to our next market, and that's the United States Oil Fund. This is the ETF. Very similar pattern. You can see it's made the turn, plus 55. Again, longer term, this is a positive market, positive trend. And you can see if we scope this, there's the monthly that kicked in quite a bit higher, and 36.45. So again, you have a chance to get in, I think, at a lower price, a much better price, and ride this wave. Because again, you may want to wait till the MACD turns up, or you may want to wait until our weekly trade triangle turn kicks in. Either way, I think it'll be a good trade. So let's see how that plays out. I think oil could go significantly higher in this crazy world that we're living in. So let's go to our next market. This is the euro. The euro is not looking that good. Now remember, we were positive on this. We still have our weekly and monthly trade triangles, very positive. So the trend is still up. But this is not a good sign that we're seeing right here. And the key thing, again, is going to be what we talk about is our pivot point, which is right here. If we go back, that we've got this top here, this top here. If we go below the pivot point, that's the 128. That's the key level to watch, and everything else is just bluster. But 128 is the key level to watch, and we're 69 pips away from there. If we break below that level, I don't think we'll do it today, but potentially we could do it on Wednesday or Thursday or Friday. If that is the case, I think we've sort of put a top in there, and we're going to see another pullback. In the pullback again, we're going to use our Fibonacci tools to do that. If you remember, they've just been kicking this can down the road for a long time, but let's just put a Fibonacci tools in, and maybe what we'll see maybe Greece elects to get out of the euro or gets kicked out of the euro. Maybe it's Spain asks for a bailout, but we could certainly see this market trade down to the 124.70 level. That's a 61%, or maybe the 126 level will be more probably in tune with the current pattern that we're seeing. So generally speaking, I think we'll see this market stay on the defensive, but watch the trade triangles. That's what's going to be the key to this market. So moving right along, we're going to be looking at, this is going to be the gold market. Again, gold looks a little bit sloppy here. We're trading down to 1765. It's had a lot of chances to go higher. It's not acting really well. And even while our trade triangles are positive, both monthly and weekly, it's a 55-minute trading range, so nothing's changed really. Only the very short-term daily has turned negative at 1771. But nothing's really changed. So again, this is still a downer for this market. As the MACD is still in a negative mode, and also you're not in an oversold condition yet. Now, if we close down here, we could certainly see this market come down, I think, to the minus 80, which would probably represent some sort of form of support and some sort of way of maybe looking to be a buyer. But potentially, I would pay close attention to this market. Again, I think the focus is going from gold to crude oil, and as I said, you don't stuff gold bars into your fuel tank to get to the local store. So let's go to our next market, and that's copper. Copper is going to be largely affected based on what's happening to the economy. Obviously, if the stock market's going down, things are slowing down worldwide. You're going to see pressure on this market. Again, a very similar pattern that we talked about before, and that is this sort of Twin Peaks, pivot point. We break below this pivot point, we can see this market come down, down to these levels, the 355 level, which was the original breakout point. So let's see how that plays out. So let's clear that screen, and let's go to our next market. Next market, silver. Silver again is sort of not acting this so swiftly. It's not quite in an oversold condition, but it's getting there. And again, this is same pattern, double top. This is the key level to watch, is right here, 33.38. If it goes below 33.38, then I think this market's going to be in a lot more pressure on the downside. So let's see how that plays out. And we could easily, if we go take our Fibonacci tools again, go from the highs, and give us a downside count. I think that's a reasonable number, maybe around the 31 or even the 30 level on the downside. So again, things can change, but right now it looks as though people are taking that risk-off situation and maybe looking at crude oil more than they're looking at this. So let's move on to our next market. And this is Apple. This has been the one that's really put the dent into the NASDAQ. And again, if we put our Fibonacci, now we talked about this before and no one really paid that much attention to it. They thought Apple was invincible on the upside. But if we put our Fibonacci numbers in here, which we talked about before this market coming down, we got very close. The 1621 level, 1621.50 level, we traded down to 623.55, so that's 621.40, and we could trade it down to 623.55 today. So very close to that Fibonacci number. We may just bop around here for a while, but that's a nice pullback. And Apple still make great products. They've had a lot of challenges with, obviously, with the Foxconn strike and also the problems they're having with their phone, with the camera, the purple haze. But anyway, nonetheless, we are out of the market. We told you that before. We had our signal right here, which is some time ago at 656, and it said to basically exit if you're an intermediate term trader, to be out of this market. If you're a long-term trader, you're still going to be in this market from the 355 level. So you've still got a lot of big profits in this market. The longer term trend has not turned down in this market. Now, what's interesting, if we take this off and we put on our downtrend trade channels in our parabolic, you'll see we're right out of the channel again, which is usually when that happens, the market comes back in to the channel, and I would not be surprised to see this market trade back up to the 660 level in the next several days, based on it popping back into the channel. It's going to be a lot of people hold this stock, and a lot of people obviously have been somewhat shocked at this 10% pullback in Apple, a little more than 10%. So let's close this up and go to our next market, this Eli Lilly. Now, Eli Lilly has come up with a drug that apparently has been a wonder drug in terms of potentially a wonder drug for Alzheimer's, which is obviously a major concern for a lot of people in this country. But you can see, just based on our monthly trade triangles, we're long from the 38.98, the market's trading at 51. So this is not a surprise to us, and that's the key thing I want to stress. The last buy we had as an intermediate buy was 44.41, which is right here. So this move in Eli Lilly, we'll scope this out some further. You'll see that, let me take this out. So you'll see how these markets are really no surprise. You can't fool the trade triangles. Eventually, you are going to fall prey to them. So again, our trade triangles came in right around these levels right here, and we've got a nice move from there. This is the highest level this Eli Lilly stock has been in over 4 years. So, hey, I'm Adam Hewison. take a look at the crude oil. It's definitely something you want to pay attention to. And let's see how tomorrow turns out. Have a great trading day. I'll be back tomorrow, a little bit early tomorrow, as I'll be traveling to London later that day. So have a great trading day.